Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems for Chapter 3, the problems for Group B, and we're on the last one, which is number 53. And as always, if you don't understand something, accounting is about understanding and application. So you're trying to apply your understanding. If you're not getting it, you can rewatch the videos and watch me apply that understanding. But if you don't understand it, then you need to go back and watch the videos, the theory videos, and other homework problems. And it's not just Chapter 3. Chapter 1 had information that that dealt with Chapter 2. Chapter 2 had information that dealt with Chapter 3. Chapter 3 has information that deals with Chapter 1 and 2. So you need to go back and watch the theory videos. And if you still don't understand after, you still don't understand the concepts, then, telephone and speak with an instructor so that will help you understand it, okay? All right, so problem 53 here is, again, it's sort of a repeat of previous work. If you look at like problem 3-48B, okay? It talks about making closing entries and preparing. Let me go back to it. Exercise 30. So that talks about preparing closing entries, and then 40B, 38B, not 48. Let me write this right here. That's problem 3 dash, not problem, exercise. Oh man, I'm really messing up here. All right, exercise 3-38B is preparing closing entries, and exercise 3-40B is making a post-closing trial balance. Okay, so closing entries are discussed in the theory videos for Chapter 3. Preparing a trial balance is discussed in Chapter 2. And remember, the name is just the name, okay, whether it's post-closing, adjusted, or unadjusted. So I'm not going to be going through a lot of the theory as I make these entries, because if you've done your other homework assignments and you've gotten them, I mean, this is just a little bit of repetition, but if you're just jumping into this as the first one and you don't know how to make closing entries, then I suggest go back and doing those watching those theory videos and going back and doing the other homework assignments. All right, so it says here, June 30th, the adjusted trial balance is shown. Notice it's the adjusted trial balance. Prepare the June closing entries, right? Calculate the ending balance and retained earnings, and prepare a post-closing trial balance. Okay, so look in the book here. Keep looking in the textbook at the adjusted trial balance, because I'm not going to bounce back and forth between the screens. Okay, as I do this. So let me get back to 53 here, problem 53 in the book. All right, there I go. All right, so let me see, as far as closing entries are concerned. All right, remember, when we're making closing entries, we're closing out our revenue accounts, we're closing out our expense accounts, and we're closing out our dividend account. Okay, and we're closing them all out to retained earnings. Okay, so when you're looking at it, right, and you're looking at your adjusted trial balance, you see that you have the service revenue has a credit and the interest revenue account has a credit. All right, well, if we're closing them out, meaning we're bringing the balances down to zero, well, if they're credits, that means we have to debit those accounts to bring them back down to zero. So I'm going to debit service revenue for $41,400, and I'm going to debit my interest revenue in the amount of $650. And since debits have to equal credits and we're closing them out to our retained earnings account, I'm going to credit my retained earnings account for the total of those two amounts, which ends up being $42,050. Okay, 41,400 plus 650 is $42,050. Okay, so that just closed out my revenue accounts. Now, when I do my expense accounts, notice that they're all debits. Okay, since they're debits, to reduce them to zero means I have to credit those accounts. Right? And if I'm going to credit all of those accounts, I have to debit something else. Well, what am I going to debit? I'm going to debit the retained earnings. Right? So I'll end up crediting salary expense. I'll credit rent expense. I'll credit depreciation expense. And in this case here, they're giving the designation of equipment. I'll credit utility expense. I will credit supplies expense. Okay, so those credits are 18,100, 63.50, 13.25, 960, and 385. Okay, so the total of all of those comes to $27,120, and so that makes it my debit. And if notice what I did, even though I wrote the structure of the accounts by saying, okay, I know I have to credit these, so I debit something else, and I wrote retained earnings. But notice I didn't write in the amount. Okay, I add up all of these, I put in my credits and then add them up in order to know how much my debit is. Okay, that's the easy way of doing it. All right, finally, I have to close out my dividend account, right? Well, my dividend account is a debit, right? So that means to bring that down to zero, close it out to zero. I have to credit my dividend account, and I debit, of course, retained earnings. And that amount was for $4,000. Okay, so those are my my journal entries in order to be able to close the accounts. Now, as I was thinking back on this, what did I hit? Prepare closing entries. I had referenced, boy, I'm really messing up here. Yep, no, 38B, right? Never mind. I got more than one thing going on in my head here. All right, so those were our closing entries. And now we're going to calculate the ending balance in the retained earnings. Okay, so if my beginning balance was $10,525, okay, and now I have my closing entries. Well, what am I doing? I am looking at the amounts that are affecting my retained earnings. Okay. Now remember, retained earnings is a equity account, and the normal balance of an equity account is a credit. That's why we're starting out as a credit of $10,525. So when I credit retained earnings for $42,050, I'm adding it. Let's see here, that's 752. I'm adding in my closing entry for my revenues, but then I'm subtracting out, because they're debits, for my expenses and my dividends. So I'm going to subtract out 27,120. And I'm going to subtract out 4,000 for my dividends. Okay, so doing the math there, 52,575 minus 27,120 minus 4,000, and that gives me a retained earnings, ending retained earnings amount of 21,455. Okay. Now notice I just did the mathematical calculation, but if I were if I were creating a statement of retained earnings, this would be my beginning right here. And then of course I would take my revenues less my expenses, so 42,050 less 21,120, and 42,050 minus 27,120, which give me a net income of 14,930. So I would add my net income, which would be the, this 14,930. Then I'd have a subtotal, and then I would have less my dividend of 4,000 right there. And then of course that would give me my ending retained earnings, which would be that number right there. So, yeah, I went down through the structure by saying, okay, here was my beginning, but then I went and I took the revenues, I took into account revenues, expenses, and dividends in order to get my ending retained earning. It's the same thing. Okay. Right, now it says here, prepare a post-closing trial balance. Okay, I'm not going to go through that for the simple reason, here's what's going to be different. Let me erase some of this here. Okay, so I have my adjusted trial balance. My post-closing trial balance is going to look almost exactly the same as this, except instead of having the word adjusted, I'm going to have the word post-closing here. Okay, and for my retained earnings amount is not going to be 10,525. It's going to be 21,455. Okay, which then also means that everything below that, right, my dividends, my revenues, and my expenses, all of these accounts have zero balances now, right? So if I create a new post-closing trial balance, yeah, I'm going to have the change in the heading date, and the retained earnings amount is going to be 21,455. And if I wanted to list all of these accounts, then I would just have zero balances, right, for all of those accounts. But since it's a post-closing trial balance, right, it's generally accepted that we don't have to list all of the accounts. 21,455. We don't have to list all of those accounts when their balances are zero. So in essence, we don't have to write in this information. Okay, so the last account on our post-closing trial balance would be the retained earnings, and the next line item would be the total, and it'd be these two total, the same footings for our debits and credits. Remember, this information here, all we're doing is we're moving into another account, so our totals are going to stay the same. All right, so I'm not going to, I just explained that in 2 minutes instead of taking another 7 to 10 minutes to write out a whole new post-closing trial balance. Okay, so just go ahead and look at the solution, and you'll see in the solution that the last account on the post-closing trial balance was the retained earnings, and they dropped the rest of them off. They dropped all of these off, all right? And then you had your totals. Either way is fine, all right? But when it comes to just the post-closing trial balance, if you had put these accounts in and you'd have put balances of 0, is that wrong? No, but just realize that's a lot of unnecessary work, okay? So that's why you'll often see the post-closing trial balance, drop all of those off, because it's understood that you've made these closing entries and those balances are 0, so why do the work and put it on there, all right? So that's it for this chapter. I hope you got something from it. And we'll move on. These first 3 chapters were all about bookkeeping. Okay, getting the information on your books, making the journal entries, posting them to the general ledger accounts, making adjustments, creating an adjusted trial balance, then creating our financial statements, and making post-closing entries in order to create a post-closing trial balance, which becomes the beginning balance for our next accounting period. And that cycle, that accounting cycle, is circular. And I think it was on page 72, it shows you the steps in a circular manner. But if you've watched other videos in the Introduction to Accounting and Bookkeeping videos on the student community, or chapter 1 videos, theory videos, you hopefully have a better understanding of what that accounting cycle is. Now, since this is the last problem, I'm just going to let you know that for this particular textbook, and the lesson assignments means you'll probably be doing a graded project next. Look in the digital study guide, because that's where the instructions are, and there are also videos to help explain those instructions. Okay, so with that said, good luck in your studies, and I'll see you in chapter 4, where now we move from bookkeeping into actual accounting.